Hi, Nick Hodge here to tell you about the September issue of Foundational Profits. I'm standing at the Beaver Creek Precious Metals Summit in the second week of September, and last week I was in the Peruvian jungle looking at a copper asset. But Foundational Profits isn't exclusively about precious metals or base metals or commodities. This is a sector agnostic letter where I write about how I'm managing my long-term safe capital, the same as you would do in a retirement account or an IRA. I write about how I'm positioning in different sectors and different companies and in what allocations. And there's plenty to get to in the September issue because it was such a busy August and early September with the rolling over of the tech sector, NVIDIA missing earnings, and new sectors of the S&P now leading that main American index higher. It's still in a bull market. It hasn't recaptured all-time record highs, but it's now being driven by rate-sensitive sectors like real estate investment trusts and utilities, and that's because we're now in a softer rate environment. You've had the 2-year yield come down precipitously over the past couple of months. Same with the 10-year yield. The former is coming down because we expect rate cuts in the fall. The latter is coming down because we expect a slowing of economic growth in the U.S. To the 1.5 to 2.5% range, but not enough to materialize a recession that many people are calling for. So that's what the first part of the issue goes through. It goes through what's happened in the past couple of months, where we are in terms of market index prices, bond levels, etc. Just so we can all get on the same page because it has been such a volatile summer in terms of markets and politics. From there, we get into positioning, and that's really what this letter is all about. I show you exactly how much I own of each position, and I explain why in the issues and the various alerts that you get. I mentioned REITs already as a rate-sensitive sector or play. We've been in one since May that's now up 60%. This issue will take profits on that REIT and rotate some of that capital into another real estate investment trust. I also make another S&P recommendation in this September issue. And things have generally been working well in the portfolio as it relates to those rate-sensitive trades, the utilities, the REITs, and to some extent, consumer staples. So with consumer staples, we're not in the SPDR, the ETF. We're in an individual company that I'm not going to tell you the name of because that wouldn't be fair to subscribers. But it's a major tobacco player that's been doing very well. We have some informational excerpts on that in this issue. And then the back half, or the final third of the issue, focuses on commodities. There's been some oil sector ETFs that we've been in lately. Oil has been soft. I explain sort of why that is and then how I'm looking at the oil trade going forward. And then I wax poetic a little bit on copper, which we took profits on in August and early September, and a little bit on uranium as well. So it's been a weird start to the second half of the year, completely different than the first half where the S&P was making record high after record high on the back of technology and AI names. Now it's doing something a little bit different, and it's not just as easy as number go up every day. So if you're looking for guidance, if you're looking to follow someone who manages their own capital in a very real way, with transparency and showing you exactly how much I own of each position I own in my long-term retirement account, then Foundational Profits may be for you, and it's certainly worth checking out, considering you can do so absolutely risk-free. And I hope you'll do that starting today with the September issue of Foundational Profits.